Okay. So
Okay.
we only have three price movements in on every chart or on every pair you come across. It's either you have an uptrend, and you know when we have an uptrend, we have price will be creating higher
Highs and
high,
higher
higher
lows.
low. And we have a
Yes.
downtrend creating lower high, creating lower low. That's what you see in every market. Every market. We have an
Yes.
uptrend, we have a downward trend, we have a consolidation. So what we look forward to trade in whatever we do is these two trends is what we are looking forward to. The uptrend and the downward trend. That's what we
Okay.
are looking forward to trade as a trader. Because why we don't trade a consolidation or a sideways market is it is a period of indecision. It is a period in the market where new contracts are being awaited, where major major movers of the market has not made a decision. So that is why we don't trade this. But you know, those times when we used to trade retail concepts, by the time price comes down, you want to buy. Price comes up, you want to sell. We just keep on selling and buying anyhow. But now that we now trade in the institutional concept, we realize that you are not meant to be in the market at every point in time. You only be in the market because mostly what we do is we target the big moves in the market. And if you want to target the big moves in the market, it is not every time big moves happen. So you wait till you have the big moves, and that is when you want to enter the market. Now let me take you to the real chart. Let me take you to the real chart. This is GBP USD. Do you trade currency as well, or should we go to volatility 75?
Currency. Yeah. Yeah, we can look at currency.
Okay. So this is GBP USD. This is one of my most traded currency. You know, I told you price only does three things. You see the up movements.
Yes.
Then you see the sideways movement. Then price started trending down. Price
Yes.
only do three things, three movements in the market. It's either it's going up, moving sideways, going down. So and look at all this trending up, like kind of sideways movement before price started going down. So when you after a market has trended to the upside, when you have some kind of consolidation before going down, it's a kind of redistribution. That's where Wyckoff comes in. Is a redistribution. When you have a consolidation, let's say before a market starts trending up, when you have a consolidation, let me use my pulley line to come about that. When you have a period of consolidation before you now start having price going up, that is a period of accumulation. That is an accumulation period. For that's in the case of a buy, but in the case of a sell, you have a sideways movement before price comes down. That's a redistribution in the market. So price will trend up, go sideways, then take to a particular direction. I don't know, maybe you've seen my video on demand and supply before.
Yes.
On YouTube. I laid more emphasis on it when I was discussing when I was making the video on demand and supply. I made more emphasis. Price will make a rally, then a base, then continuation. That's how price moves. Three phases of price movement. Three phases of price movement. Price will make a rally, base, then continuation. So now let's start marking up our chart. This is what I do on any chart I want to work with. I start from the higher time frame because the higher time frame will dictate every other thing I will do in the market. Just like just like the Bible, that when the foundation is destroyed, what can the righteous do when the foundation is destroyed? What can the righteous do? If you miss the direction on the higher time frame, every other thing you'll be doing on the lower time frame can be a risky one.
Okay.
So if you have established that the market is trending down, creating lower lows, lower high, lower low, lower high, lower low, lower high. I mean, yeah, lower high, lower low. Clearly, this market is on a downward trend. This GBP USD is on a downward trend. It's a downward trend, no doubt. So, and if the market is on a downward trend, what opportunity is we'll be looking at is selling opportunity. Because that's, if you actually want to ride the market for a very long time, that's how you should start thinking in the direction of the trend. Except there are a few cases you just see some scalping opportunity against the trend, but I don't advise people to do that except you have fully mastered your game. Except you have fully mastered your game. That it is at that point I can support you going against the trend. But if you are still trying to master, just move with the trend at every point in time. So after establishing on the daily time frame that this is a downward move, then I will go to my lower time frame, because the lower you go, the more information you have to play with, the more information you have to work with. Hope you are getting it. The more information you have to work with. And during the time price is going, creating lower high, lower low. At the same time, price will be creating liquidity as well, which will be giving you assurance of where price is moving to. Look at it, equal lows. This is liquidity in the market. Price created equal low here. See, price created equal low. I told you, as you are scaling down the time, you keep on having more information to work with. Now we scale to 8 hours, I saw an area of liquidity. So as price is going up, I know that by the time price activates from the last up candle, the last up candle before the last up candle before this sell, because price actually activated from this imbalance. You know about imbalance, right?
Yes. Yeah, if you can just give me a summary of imbalance.
Okay, let me mark it first. This is an imbalance, and that's where price came to activate from. An area of imbalance. Yeah, price came to that area of imbalance. Now let me talk about an imbalance. Yeah, an imbalance in the market is actually a situation whereby only the buyers or the sellers are in the market. Only the buyers or the sellers are the dominant force in the market. Look at, in this case, look at the price action we are having here, then we now go to this place, we now have a strong push to the downside. And look at the strong push. Even the wick that we have here doesn't come into this place. So when we have like this, a kind of, it has created a space, only the sellers. On a normal day, we are supposed to have the buyers and the sellers. This is a market for the buyers and the sellers, but you just have a dominant force, only the sellers. Meanwhile, creating a space in the market. In a situation like that, price will always come back to fill the area. Because look at all the prices we are having here. At one point in time, everything has gotten filled, but this place, we have only the sellers in action. So we mark it from the week that started the move and the week after. You know what a week is? That shadow. Some people call it shadow. All this stuff. So see, price now broke the structure here. Price broke the structure, then created the liquidity, came back right into the imbalance to fill it. So imbalance is a kind of institutional formation too in the market. If you still scale down to a lower time frame, you realize that there is a form of institutional candle that is created on lower time frame around there. So price will
If I can ask it,
feel an area of imbalance, and it can be filled immediately or later. But look at, in this case, look at how many hours that price actually returned there to fill it. And the theory behind an imbalance is the smart money, they will either, come back to an area of imbalance, just like the way we approach the institutional candle, is either they tap into the opening or they fill the 50%. And look at, in this case, I think they fill the 50%. Let me bring out my Fibonacci tool. The 50%. They fill the 50%. Look at it. Perfectly filled, came to the red line is the 50% in my Fibonacci. So they filled the 50% and price started going down. Price started going down. And look at it. We have money right here. Since we are on a downtrend, I always look for liquidity below to target. If we are on an uptrend and I'm buying, I look for liquidity above, because liquidity is like a fuel in this market. The smart money guys, they look for where they can get money to clear. So, and we have established on daily time frame that we are on a downward trend and price has created equal lows here. So anything that makes me to look for a selling opportunity above, my very first target is going to be this liquidity below, because I know price will definitely go after where there is money. And look at it. Price came, it was as if it was going up, but this is an opportunity to enter the market again. Price will just go on a straight line. It will always create opportunities for you to come into the market again and again. That's why we don't change price. That's why you see us using sell limits, buy limits, because okay, if I miss this move, I know price will always come back to create a lower high. So, and look at it, it came back perfectly into this institutional candle. It came back perfectly into this institutional candle. See, bam. And look at how they smash the liquidity here. This is going to be my first target. Anytime, that's what I use in drawing my TPs. I look for liquidity in the direction at which I'm moving the market to. And look at it, they smash it because people are, to the retail concept, to the people that are still doing those retail concepts, they see this place as a very strong support and they are buying. And look at everybody that actually bought it actually made money. So our price is still coming back there. They are still seeing this place as a strong support. So they are buying. Okay. Their stop losses are below here. That's why this is an area of liquidity. Everybody placing a buy here, we have their stop losses below here. And that's why I've indicated that, see, there is money here. And look at it. Yeah. It's smashed into that area of liquidity straight. So they smashed into it. What are we expecting here again? For price to come and create lower high. For price to come and create lower high, then go down again. Because price will always move sideways. That's how it moves. Price will always move in a zigzag form. So that's what we are, and look at the possible area where we could actually have, price activating from. Look at another imbalance. Look at it. From this week to this week, it has not been filled. So don't be surprised if you see price coming back into this area to fill it. This imbalance again in the market. So there are places that needs to be filled up there. Look at it. All these areas needs to be filled. Only the sellers are in play in all these areas. So it needs to be filled. But, at the same time, I make use of my Fibonacci in two ways. Is either I use it to get the 50% of another block, or to determine a discount or a premium area. Now let me talk about premium and discount. Premium and discount area. Let me use an iPhone as an example. If you want to buy, in the case of a buy, price is going up, creating higher low, higher high, higher low. We are dealing with price on the chart. Higher highs, higher low, higher highs, higher low. Now, everybody wants to buy an item, even if you want to buy a car. If they call a car for you, okay. If they call the car, let's say they call the car, they call it $5,000. Okay, $5,000. If you actually ask for a discount and they tell you there is no discount on the car, and maybe probably few years after, you add that, okay, there is about 50% discount on the car. Immediately you go there and you want to buy because now the discount you are expecting has been given. So in the case of a buy, nobody wants to buy when the price is high. This is an high point in the market. This is an high point in the market. So you buying low is the kind of negotiation in the market. Okay, the market has come to the high point. You always want to wait for market to come down low to a discount point before you buy. You always want to wait for price to come to a discount point before you buy. Hope you are getting the logic, sir.
I'm getting, sir.
Okay. In the case of a sell too, you always want to sell when the price is at premium. You don't want to sell when the price is here. You wait for the price to come back to a premium point, then you sell. Premium, then you sell. So, and this is how we determine our premium and our discount. Now, in the case of a buy, if I draw my Fibonacci, if I draw it to, okay, let me draw it to this point. Now, anything below 50%, is a discount. I don't want to be looking for my buys above 50%. So in every market, you are going to see order block or institutional candle before a discount area. But these are, we also filter our institutional candles. If I see any assuming price is retracing down, and I see any institutional candle above my discount area, I'm not interested in it. I will always wait for price to come below my discount, to come into my discount area. Then that is when I want to look for my buying opportunity. When price comes into my discount area. The same thing applies to a sell. I want to sell at premium price. So anything above 50% is premium. Anything below is not a premium. Anything, that's why I marked my 50%. That's why I put color red to differentiate it. I will send you my videos on YouTube on demand and supply. You still watch it to have more understanding about premium and discount pricing.
Okay.
I'll send it to you. Now, let me take this illustration to the real chart. Let me take it to the real chart. We have area of imbalance here. We have an imbalance here. We have an imbalance. We have an imbalance here. And we also have, like 2 areas of imbalance. So if you're actually looking at that, okay, which area are you actually going to be looking at? Now, let me now bring out my Fibonacci from the beginning of the move to the end of the move. Okay. Now, anything above here is my discount price. So yes, I'll be looking for price to come all the way to come and fill this imbalance. Oh, I think my network has started doing, and okay, but I'll be looking for price to actually come all the way to come and fill either of these. But because these two zones actually falls in my premium areas. But if I'm to look for where to actually look, I'll take the one above. I'll take the one above because it has to be filled. So I will actually be looking for my cell around this area, the one above.
So why don't you take the one below? So
below.
So the one. Okay.
Okay. I told you we are dealing with price here.
Yes.
We are dealing with price. This is a premium. This is a premium price, but this premium price will still give me better profit than.
Yeah. Now I understand. Yeah.
Just like you have your discount too. If they give you a discount of, let's say they give you a discount of 50%. I mean, they give you a discount of 20%, and you see another seller that wants to give you a discount of 30% on the same item. You are going to go. So that's the same thing. That's what I'm applying here as well. If I still wait for price to come up here, it will give me a better value for my money.
Okay.
And that's why I actually, you see, I have one area, I have it red on my Fibonacci, then I have some areas blue. So whenever I'm looking for my discount or my premium zone, I look forward to these blue areas.
Okay.
That's where I want, that's my 79% and my 70.5%. According to research, it has high probability of, price coming into that area.
Okay.
Although at the same time, like me, I'm a kind of trader. I'm very open, and I won't just, be dogmatic about an idea. One of the things we still look to confirm our entry is, okay, when price comes into this area, before we take, whenever price wants to move, this I'm talking about entry. If price comes into an area, I expect it to be creating to break structure to the downside and start creating lower highs, lower low, lower highs, lower low, lower highs, lower low. So despite the fact that price is coming into my premium zone, if price gets here, then I will now switch to a more lower time frame. This is on 8 hours. I will look for break of structure on 15 minutes. So if I have a break of structure to the downside on my 15 minutes, price comes into there, and I have a break of structure on 15 minutes to the downside, I will wait for price to come back and create lower high, then that's where I want to now shoot, take my shot.
Okay, Mr. Wale, let me ask a question. Okay. For me I want to understand the imbalance. Okay, this imbalance, so it means that in a cell here, an imbalance is an area where buyers are not even in control.
They are not in play at all. Only the sellers.
They're not in play at all. Yeah.
Only the sellers.
Yes, I can see.
You see, there's no green candle around there. No green candle like this place. This place has been filled, but this area is still, is still open.
Yes.
Everything needs to be filled for the market to actually be balanced. It needs to be filled.
Okay.
So whenever market creates an imbalance, it has to be rebalanced.
Yes. So my question now is, where you first look at the overall trend on the 24-hour, right?
Yes.
Then you went down to the 8 hours.
Yes.
Now, when do you make a decision on which lower time frame to actually place your trade, look for an entry? Because you definitely are not going to look for your entry in this 8 hour. So you're
Oh,
gonna
no, no,
go.
no, 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 no. We don't look for.
Okay.
I don't even look for entry on 1 hour.
Okay.
I can't afford the
Okay.
stop loss.
Okay. Okay. Okay.
Okay. Now, this is what we do on higher time frame. Okay, let me do something like this. Okay, I want you to understand something. You know, this is actually a place where the market can actually come to. This is an institutional candle as well. This area, this is an institutional candle. So
okay, yes.
Above here, I have so many places price can actually come and activate from. This is an imbalance. This is an imbalance. I have the institutional candle above and all. Now, I haven't identified your potential area where you want to sell the market on higher time frame. Now, you come to your lower time frame. Because why you come to your lower time frame is all these areas, this institutional candle you are seeing on 4 hours, if you come to a lower time frame, inside that 8 hours institutional candle, you are still going to find a lower time frame institutional candle.
Okay.
This is the last buy before the sell, right?
Yes.
Buy before the sell. If I still go to 1 hour, I'm still going to see the last 1 hour buy before the sell right inside it. If you keep on going down like that, keep on go. Let me zoom it so that you see it very well. Okay. You see the same, it's still falling under the same, same level. If you keep on, if I still go to 15 minutes, you still see the same thing. Let me see. Let me see.
You said something very, very fundamental. You said that you cannot afford the stop loss on a higher time frame, but the stop loss on a lower time frame is going to be minimal.
Yes.
Very minimal.
Yes.
Okay.
And don't worry, I'll talk about entries. I just wanted to get this. I'll talk about entries, how we approach, how we approach our entries. I'll talk about entries shortly. I just wanted to get this one. Look at the area I mark as my institutional candle. Within this area, if you see, we can still find the last up candle before the sell that broke structure. Right inside the higher time frame institutional candle. So this is how we, actually come about all those smaller SL areas. Now, from this area to this area, let me measure the number of pips. That's 8 hours institutional candle. Look at it. this 224 pips.
Yes.
And your stop loss is going to be above the institutional candle. That means you are going to be using 262 pips if you have taken 4 hours stop loss. That
is a lot.
Yes. Just now imagine now on 15 minutes. Look at the way I've narrowed. Look at the way I've zeroed my entry. I think you can see this is the last up candle before.
Yes.
Now let me measure the number of pips. Look at it. How many pips? This is just no. This
38 pips.
This 38. Is it
38 pips? Yeah, 38. Yeah.
This is just 38 pips compared to 262 pips that we are looking at before. Now we are still going to streamline this. Let's go to 3 minutes.
Okay.
Okay. This is 3 minutes. Let's see if I'm able to get it. Oh, okay. I just hope it's going to show us that area. that 3 minutes will be very far away. As in, let's see if we'll be able to locate it. Oh, it's not bringing the 3 minutes on board. That is actually how we, we go about our entries. If you look at another block or an area where you want to sell, as you are going down, you'll be having opportunity to, to lower, to refine your entries. That's one approach. By the time I talk about entries, now you get to understand, so many other things how we go about our entries. But that's just, one way that we go about it. Now, let me go back to that 8 hours time frame. Because even on a normal day, I don't take SL of 40 pips. I don't take SL of 40 pips again. I look for at most SL of 15 pips or 10 pips on currency. Yes. Now, let me now take you to entries. Let me take you to entries. So now, let me talk about entry here. Assuming this is your 8 hours order block that you are looking to sell. This is your 8 hours order block. And price is coming on 8 hours, coming right into the order block. Immediately, price then enters the order block. Immediately, price enters the order block. What do? I switch to 15 minutes time frame. When I'm on 15 minutes time frame, or it depends on the pair I'm actually trading, or how far I actually want to take my TP to. But basically, I switch to 15 minutes time frame. And what am I looking at on 15 minutes time frame, or on all those lower time frame? For 8 hours to be creating higher highs, higher low, and coming into my point of interest, 15 minutes too will be creating higher highs, higher low, higher highs, higher low. Now, you see it's creating all that. If price is ready to move the opposite side, I expect price to break structure. You see the break of structure, right?
Yes.
I expect price to break structure. Then price will now come back and create another lower high that is lower to this.
Yes.
To have a confirmation that price is really ready to go. Now, I will still wait for another break of structure. Price will still come back and create a lower high. And this is when I will be looking for a 15 minutes institutional candle around there to take my entry to the downside.
Okay.
This same thing that I just explained to you will happen on 3 minutes. It will happen on 1 minute time frame. So now, the same thing applies. If I see that 15 minutes has started breaking structure to the downside, I can still drop my time frame to, let's say, 5 minutes or 3 minutes, and still look for the same thing on 3 minutes time frame or on 1 minute time frame. That's how we get all those sniper entries.
Okay.
By the time you do the same thing on 1 minute, your stop loss area is going to be very small. Because the same thing that happens as price is creating order block on 15 minutes, it's creating it on 1 minute, it's creating it on 15 seconds. For those that have access to 15 seconds, that's for the paid trading view. You have access to 15 seconds. So you can actually get into on 15 seconds. And that's where you see people coming about 1 pip stop loss.
Wow, but you need to be a pro to go to 15 15,
Yes.
you say 15,
15 seconds.
15 seconds. Now you need to be a pro to trade 15 seconds. Wow.
No, it's just the same way. It's just the same way. You just look for your setup. Because for price to be going a direction, it has to be creating lower highs, lower low, lower highs, lower low. So you just wait for, you know, market structure formation of 15 seconds as well. And market will always create that order block. That it will
so this order, the order block, is it the same? Is it that same area of our imbalance?
Yes. Okay. Now, assuming this is an area of imbalance now. This is an area of imbalance. And I have another one above. You know, after using Fibonacci to determine my, you know, my premium zone where I actually want to sell. Okay, I have two imbalances like this. Now, one thing that will give me an extra confirmation that price is ready to move from a particular zone is if price comes into here. Price comes into here, and you know, for a setup of, for an imbalance of 8 hours, it will be advisable you look for, let's say you look for 30 minutes break of structure to the downside, or let's say 1 hour break of structure, because you actually want to ride this trend for a long time. But assuming it's a setup of, let's say 4 hours, you should look for, or let's say 1 hour, you should look for break of structure of 5 minutes. So immediately price comes into this area and you see price, you know, I'm coming. Let me clear it up and draw it again. Immediately price comes into the area of imbalance or any area you want to either buy or sell. Then we switch to lower time frame. This 8 hours, I will switch to 1 hour time frame. And I want to see that break of structure on 1 hour. After I have the break of structure like this, then I'll wait for price to come back. If price gives me my lower high, then I know that price is not ready to come back to the zone above. Because this is how price will always move. Hope you remember. Price will always move. So if it has started giving me this structure on 1 hour, then price is not ready to come back. Maybe it is later in future that it will come back and feel the, you know, the imbalance above.
Yes.
But if it's not giving, because if you, that's why you don't just approach, you don't just make use of lower time frame anyhow. It actually depends on your setup. If you are looking at the setup of 24 hours time frame, then you should be looking to you know, for a kind of 4 hours break of structure at the point where you want to sell. Because if you just come down to 1 minute time frames, 1 minute time frame can just give you some kind of break of structure and you think the sell has started. Whereas 15 minutes has not broken structure and 1 minute has started breaking structure to the downside.
Okay.
Yeah. So that's how we go about, you know, confirmation of our entry points. So on GBP, USD, all this area, this, like I said, this imbalance area, I'm really looking forward to it. But one thing I do is, if I know that price is coming up here, I look for opportunity to buy to this area. But it is because I have mastered my own game. Because if I'm looking for a buying opportunity to this area, that's a counter trend. Hope you get. That's a counter.
If you're looking for a buy opportunity where?
So this from here, you know, price is here at the moment. So I still expect price from what we have, price will come and create lower high to this. lower high,
Yes.
which I'm expecting it to come and do that around this imbalance area. So this distance alone, if I measure it, let me measure this distance to our entry point. This is about 313 pips move. So I don't just watch 313 pips move just plain like that. So yeah, if I go to a lower time frame, let me go to a lower time frame. I'll definitely see an opportunity to buy the market. I'll see an opportunity. Okay, this is a very good opportunity to even buy the market. I've seen opportunity on 4 hours. See, this is my last buy candle. My last sell candle before the up move that broke structure. Before the up move that broke structure, right? This is my structure. Look at my 4 hours break of structure. So what am I expecting? This is a very good zone for me to buy this market to this place. So I will just, what I will do is map my zone. Map my zone and go to a lower, and go and look for a lower time frame entry. So I've marked my institutional candle here, and price can actually come down here as well. This is another good area. This is another good area that price can actually come to. This is a good area, but this is where I'm looking at. If this place does not play out, then I'll be looking at this place. So let me look for my opportunity here. This is my break of structure on 4 hours. Let me go to my 15 minutes. Okay. Okay, this is my 15 minutes. And right, okay, look at 15 minutes. And price has even given a liquidity area of 15 minutes. You see, the more you go down to a lower time frame, the more things you begin to see. See, this equal lows. Equal lows. This is a liquidity in the market, and I have a 4 hours institutional candle below. So this is a reason for price to even come. This is a reason for price to come down into this zone before the buy.
Okay.
You see it now. So because price definitely come after this liquidity here. Price will come after this liquidity here. So I expect price to come into this place before going up. So what I will just definitely do is I wait for price to come into this zone, then a 15 minutes break of structure. And this is how I expect it to be. Price comes into this zone, do some kind of consolidation, then you have a break of structure, then wait for it to come back again, and that's when I want to take my shots to the upside. And since I know that there is already an 8 hours imbalance up there, that's going to be my target.
Okay.
Hope you get the logic now.
Yes.
So is either I wait for price to come into the 8 hours point of interest, or look for an opportunity to buy into that area. Because by the time I look at, just imagine a 300 and something pips, it will even take maybe up to, let's say, Wednesday or Thursday before price will get into that area. So, but you know, while waiting for price to get there, you can actually get some intraday moves that will take you on a buy journey into that area. So the essence of making use of lower time frame, you know, I've already established on higher time frame that the market is on a downward trend, but I know that market will always, I know the market is going up. That's why I quickly look for lower time frame 15 minutes buy entry. So maybe we should look at another pair. And which other pair do you want us to look at?
USD JPY, let's see.
Okay. USD JPY. This USD JPY, first in 24 hours time frame to determine this is a very strong bullish move on USD.
Yeah.
In fact, look at the impulsive move. Look at the impulsive move. Look at the impulsive move. Bah! To the very strong move to the upside. But you know the beauty of this move. The beauty of this move.
Oh.
Let me tell you what I like when I say an impulse. Look at the price action we have in here. Like, you know, all these ones. But this is a very strong. This is a very strong move. A very strong move. If price still wants to continue going up, price will always correct. There will always be a correction. You think price is coming down, but it's only correcting to go up higher. That's if price is still determined to go up.
So now in this case, what are you analyzing? If you are analyzing that price is going to go up, so what do you expect the market to do?
Okay, now in this case, let me go to, I'm expecting the market to, you know, make a correction.
Correction first, okay.
Correction before going further up. So now we don't buy the impulse. I will wait for the correction phase. That's where I want to look for my opportunity to buy.
Yeah, because right now it's too, remember, it has gone too far.
Yes.
So
yes,
you
so
can't be looking for any buy opportunity right now.
Come back to discount.
Yes.
Price has gone to the high point here. I need to come back to discount. And
discount.
On this time frame, let me just mark my possible areas. This is where I'm looking for. This is where I'm looking at.
Yes.
Let me mark it before going to lower time frame. This is where I'm looking at. Price will always make a correction. That's just it. So if you actually want to buy, this is where we are looking at. So let me go to 4 hours time frame. Okay, these are 4 hours time frame. Okay, you see that on 4 hours, we can still reduce that level, because 4 hours to on
yes.
You see, it's smaller and smaller. So let me go to 30 minutes. Okay, my 30 minutes will be down there. Look at it. My 30 minutes is down there. And look at the price is creating higher highs, higher low, higher highs, higher low. So, and look at what happened here. Price actually came down. What I will look for here is, I will actually look for, you know, price. I expect price to come here before pushing up higher, right? But I will look for an opportunity to sell to this point.
To sell.
Yes.
Yeah.
Because, you know, if you have to wait for this, maybe till Friday before price gets into this place. So, but, you know, the good thing is we've actually determined where price is going on the long run, on the higher time frame. But if you are waiting for the higher time frame alone, you'll be missing a whole lot of trades. On a normal day, if you have gotten like 50 pips, if you have gotten 100 pips on what's it called, currency pairs, you are good for the day. If you have gotten that, good for the day. And you don't wait for price to give you even more than that without you getting into action. So first thing we do here is this 30 minutes time frame. Look at the price movement. Let me bring out my poly line. See, we have this up move. We created the low. We have, okay, we can take this as another low in the market. Then it broke the low. Then it broke the low. Break of structure. What are we looking
so this is, so this is break of structure, yeah.
Yes. So 30 minutes is actually setting up for itself. And we've established on the higher time frame that price is coming back into this area before pushing up further.
Mm-hmm.
So, and 30 minutes has actually set up for itself. So what I'll be looking at is this area must not be
price. Yeah.
because that's our high. If it actually wants to go down, if it actually wants to go down, it must not be broken. So now let me look for my area where I'll be looking for. So price, and look at it, price is already making that corrective move into this area. Look at the impulsive move to the downside. Look at the way it's now going back. It's a correction move. A correction move won't be as strong. Look at the way it came down. It was obvious, very strong move, very decisive move to the downside. It's now making a correction. And what I expect is price to come here and shoot to the downside. Then we already established where we want to take our buy off. That's why at times when I drop some setup, I will tell my followers on the group that, see, this is a buy to sell order. This is how we see all those kind of stuff. This is sell. We know that we are selling in order to buy. We want to
so where will you put your entry here if you want to sell this market?
No,
where will you be planning to sell?
This is my selling zone. The last up candle before the sell that broke structure. Yeah.
Okay.
So it now depends on how I want to play it. Is it for me to have a reduced SL? I look for 50% of this zone, because I know the institutional guys will always play the 50%. It depends on your risk.
Okay.
The 50% of that zone. So this will actually be my entry. That's if I'm playing the 50%. But if I can accommodate to engage in more risk, because it is not every time that price will come to 50%. Price can just come to the opening of this institutional candle and start selling from there. Open there. Price can just come to the opening and start selling. It can come to 50% and start selling. So, but you know, at times you have to, they said you can't eat your cake and also have it. If you know you want to go with a tighter stop loss, you go with 50%. If price comes there, fine. If it doesn't come there, you miss the move. Then you come and wait for it when it comes back to create a lower high. But normal day, this zone is where I want to look for my selling opportunity. So what I will do is I wait for price to come into this zone, then switch to my 3 minutes time frame. 3 minutes time frame. So when I switch to my 3 minutes time frame, what do I want to be seeing from that zone? If price has gotten into that zone, I want to be seeing price breaking structure, come back, activate from there, break structure, come back, activate. Then I will wait for it to come back to an high point, then sell. You get that?
Yes, but in these 3 minutes, we are not able to see that zone. Why?
You said what?
Yeah, we are on 30 minutes, right?
Yeah, we are on 30 minutes.
So when we went to 3 minutes, I was expecting us to see the zone that you marked on 30 minutes.
Yeah, we are going to see it. You know, by that time, you know the market is closed now. So by the time price, you wait for you still stay on 30 minutes for price to come into this zone. Then when price is in this zone, even if you change to 1 minute, is the current price you'll be seeing. It's not now that
we go
to the back and be scrolling and be looking for it. So when you know that price is in this zone and you have your 2 lines marked already, So you are looking for break of structure to the downside before you take your trade. Because price will always give you the same thing. Break of structure will come on 1 minute, but I like to play it on 15 minutes because 1 minute can easily give you a fake break of structure to a particular side. So I like to stay on 3 minutes.
Okay.
Yes. So I just look for, and like I said, I just set my sell limit. I set my sell limit is either I use the 50%, set my sell limit, and your stop loss must be above this institutional candle. It must be above it. So anything that makes price to trade above this level is an invalidation of the setup. That means it's not ready to go down yet.
Okay.
Or with what I'm saying, okay, now, do you know about divergence? Have you heard the word divergence, trade divergence?
I've heard the word divergence.
Okay, now I use it as confirmation as well. Confirmation.
Okay.
You know, for you to be sure price wants to move. Now, you know, we don't really use indicator as a smart money trader, but there are some indicators that actually, make a lot of sense, like RSI and MACD. It is very good in spotting divergence in the market. Now, let me bring out my RSI. I like to use RSI. RSI. Let me bring it out and see, maybe it's even giving divergence already. So now, you see what I'm even saying here? Now, there's high probability that price is going to respect this zone. You know why?
No.
Let me show you. On a normal day, an indicator and price is supposed to move the same way. Indicator and price is supposed to move the same way. Indicator and price. But in a situation whereby you are having it go opposite side, then something is about to happen. Look at this place. From here to here, what are we seeing here? Price is making lower highs on. Price is making lower highs. Price is making lower highs. And this same level that price is making lower highs, what are we seeing here is making higher highs. So that's a divergence in the market. That means this market is losing, as it is going up, is losing momentum already. And we have a possible place for activation.
So meaning that there's a high probability that it's going to fall.
It's going to drop, yes. Because RSI is losing momentum already. It's creating lower highs, while this one is creating, what's it called? This one is creating lower highs. This one is creating higher highs.
High highs, yes.
So we have a great divergence already. So there is high probability because, see, it will still come, it will still leave here. By the time price open, it will still leave here and still come up. Why this one has started creating, what's it called? Lower high. So by the time market opens and we still see that creation of lower highs on RSI, why this one is creating lower and higher highs.
Higher highs, yeah.
Going to drop. It's going to drop straight.
Yeah.
It's going to be a drop. So that's another way I use my, what's it called? I use my RSI.
Okay.
So, but on a normal day, for you to have your confirmation, if you just set your sell limit, because we have two kinds of entries. We have a risk entry, whereby you just set your sell limit. You are not waiting for any confirmation within the zone. You are so sure of the setup that when price comes into it, it will drop. But for you to have a confirmation, you wait for price to come into this zone. You go to your, let's say, 5 minutes time frame. You now start waiting for break of structure to your bias direction. before you take your entry. That's the confirmation entry. Because price will always give you opportunity. If you come to 5 minutes and price comes like this, you see it breaks the first structure, it breaks the second, price will always come back. It can take time, but price will always come back to give you another entry to the downside. So you just come down, you come to your lower time frame, you wait for that confirmation so that you won't jump into the entry, into an entry or get into the market when the market is not ready to move to your buyer's area. So let me take you to volatility 75 as well. You know, we start volatility 75, the kind of market structure it is given these days, I don't really like it, but to me, I believe it wants to sell, but you know, it's one crazy pair at times. Look at it. It's creating higher high, higher low, creating higher high, created this low, created this high, then it broke structure. It broke structure here to the downside. Then it came back. It couldn't create another higher high. So that's why I know that, okay, it actually want to go down. And look at where it created the higher high. See our order block, the last top candle before the sell that broke structure. So it actually wants to sell, but V75 will do some crazy things at times before it will eventually go the direction. So let's go to 4 hours time frame. Whether we have more information to play with. See, this is where it activated from, and look at it. It broke structure here on 4 hours as well. It broke structure on 4 hours. This is a 4 hours break of structure. Probably it might want to. This is an imbalance too. Maybe it's trying to come into this imbalance area. Might actually come there to come and fill this imbalance. See this imbalance. So don't be surprised if you see VIX 75 pushing up this area before dropping down.
Okay.
Before dropping down. But I don't like the price action on it. It's not clean enough. Look at all these wicks up and down, wicks up and down. Not clean enough for me. But if I see it push into this area, into this imbalance, then come and drop, fine. But I don't like price action, seeing wicks are all around like this. I don't like it. It's a very good area to look for a selling opportunity. A very good area because this is a clear break of 4 hour structure, and they still broke this structure again. This is another break right here. Another break. So I just wait to see what's going to happen. Push into there, then drop. Because it has actually set up for itself. It has set up for itself. Perfect sell. It has set up for a perfect sell. Let me go to 1 hour. Let me see what's happening on 1 hour time frame as well. Okay, see. The price action is just okay. Look at 1 hour is even creating higher lows already. 1 hour is creating higher lows, and 1 hour is even looking like a kind of buy thing already. So it might actually push into there. What we actually do is we wait for price to show us the direction before we take action. This 1 hour break of structure. It has broken structure to the upside. So you can just see price come back to activate from this area before pushing up. So, but at this point, I will still wait for it to show me something more precise. something that is still clearer that I can work with. So I can just remain on 15 minutes and see what will actually happen on 15 minutes. So it's not just clean enough for me. That's why I didn't even, okay, I took a trade on it in the morning and it didn't play well. I just left it. It's not just clear enough. All type of. So I just leave it to, to do its thing. Let me look at boom from 1,000. From 1,000. Okay, this is from 1,000. This from 1,000 is I've marked it for more than a week now. This is where I'm looking for my buying opportunity.
Okay.
I'm actually looking to buy because this is a clear break of structure and price is coming back into a demand zone. And this is why it is a demand zone. Look at the strong push to the upside, meaning there are buyers at this zone. So when price comes back there is high probability that it will move. And look at the strong impulse move to the upside. And look at when price is coming back, look at it. It's a correction move. So there is high probability.
You see this, you see this structure is like that USD JPY.
Yeah.
You see the move, a strong move up.
Yeah. So this is where I'm actually looking for. I've been waiting for it more than a week now for price to come into this zone so that I can take my buy. And it got into and it started doing consolidation for almost
consolidation. Yes.
And okay, look at, I have another zone here, but this is where I was actually looking forward to play. But it got into this zone. It has been doing a consolidation right from here. So well, if I still eventually see something like, let me say, something like this, if it gives me a strong push to the upside, so I will be looking for it to actually come down, then shoot it forward.
Okay.
Yes. But why I have a strong, bias about it coming down is look at this imbalance right here. Look at imbalance. Balance is right here. So I have my imbalance, I have my institutional candle here. So this is a reason for price to actually come down into my zone.
Yeah.
Where I want to look for buying opportunity.
Okay.
I believe price should come and clear this liquidity, to come and fill up this place. And into my zone before we start looking for how to buy it to the upside.
Okay.
So that's how we look for, that's how we approach our entries. That's how we approach the market. Higher time frame first. After the higher time frame, we come down to lower time frame to look for entries. But we don't still forget what is happening on the higher time frame. We bear it in mind that okay, this is the actual direction. So if you are doing counter trend, you don't want to hold the trade for a very long time. You just quickly want to get in, take your trade and out.
Okay.
So any question or you want to digest the one we've done tonight, then probably by tomorrow. Any question?
Yes. Yeah. So okay. Let me digest this. I will actually go through this Zoom recording, but I think what I would like us to do also is to tomorrow we'll probably take examples of trades that maybe you took. Then we look at the analysis from the higher time frame up to the lower time frame and how it played out at the end.
Okay. What I'll do tomorrow is, as I'm analyzing my chart tomorrow that I want to send, I will carry you along with the analysis.
Okay.
I can even do a short video as I'm analyzing it, explaining it alongside.
Yes. Yes.
So I'll do
Okay.
that. Let me look at one more pair before we round it up. Let me
Okay.
at
Okay.
John 100. Let me see what's happening on John 100. I like that pair too. It's very good value. We are able to catch it. Okay. Let me clear up the charts. I'll go to my daily time frame. Okay. We are actually having some kind of consolidation. This is a sideways movement.
Yeah.
Just moving sideways.
Yeah, it is.
Moving sideways. Sideways. Not really giving a very clean.
There's no clear direction.
But if you look at it typically, let me, I think I'm seeing something here.
Okay.
Way out. I'm having more of a buy bias. Look at what price did. Look at all these lows. Look at what happened there. Price took out those lows.
Yeah.
So we have a
Yes.
what do we have there? An institutional candle, right?
Yes.
Because it took out all these lows. And after taking out all those lows, look at what happened. Break of structure.
Yes.
I think we broke this one too with a week. But for price to trade it to this place, that means it actually disrespected it, so it broke it. So after breaking structure, price is now returning back into this institutional candle area. So let's now drop to 4 hours. You see it? Price is returning back into this area, and price has even created equal low liquidity there. So it will come and clear off this liquidity. So what I'm looking out for is price to come down, to come after that liquidity below, because it's actually descending down, and we are already expecting price to we are expecting price to come into our institutional candle area. Since we are expecting price to come into our daily institutional candle area, price has given us more reason it's going to come down. So clear that liquidity, come into this area, and we switch to 15 minutes time frame, because this is a daily time frame. This is a daily higher time frame play out. So we can even look for your break of structure on 1 hour. And what you want to see is price comes into this place. You want to see a break of structure. Then price comes down. Then you start taking your trade off. So on John 100, this is a very good potential area where we look for how to take the market up.
Okay.
So we look forward to seeing all these ones playing out maybe in the course of my next. Or this is volatility. Price can move into this area tomorrow. This is not currency that people waiting. This one price can as a fly into this area tomorrow. But you know what's happening. So that's how we, look for our opportunities. That's how we look for our opportunities.
Okay.
So digest this. Probably by tomorrow you will even have more questions after you digested it very well.
Yes. Then okay, this is a plan. This is a plan that I have. The plan I have is that I really want to polish myself from now within the next 3 months.
Okay.
Right? Yeah, between the next three to 4 months.
Okay.
Before I actually get into active trading.
Yeah.
So
don't switch to your demo for now. Switch to your demo. Don't even do live trading now. switch to
Yes.
your demo, perfect your work on demo.
Yes. So I don't know. That since this is my plan that I really want to polish up within the next 3 to 4 months. I think you might probably have some advice or the way forward, what I need to do, because I want to take 4 months to actually really study,
Sure. This
study properly.
yeah,
Yes.
I'm listening.
Yes. So I think another thing also is, if you can also give me maybe exercises, maybe to identify some things, then that will also help me to really polish myself.
Yes. I'll be giving you tasks. I'll be giving
Okay.
you tasks to do. Now,
Yeah.
on like maybe tonight or
Yes.
whenever you are tasked, I want to see how you are identifying your higher highs and higher lows, your market structure. You know how to use your holding line, right? You have your trading view.
Yes.
I want to see your identify your lower highs, lower low like this.
Yes.
Identification like this, send it to me. I want to actually see your markup, whether your markup is right. Because if your markup is wrong, you get every other thing wrong.
Okay. Just take again. Where do I click here on trading view in order to mark it up? Just cancel it again and yeah.
These are all the tools. These are all the tools
you have. Yes.
For you, this is where you're going to see your polyline. When you click on this one, this is polyline.
Yes.
You click on this star to actually add it to your favorite, so that you just pick it up here instead of coming to one by one.
Yeah.
All the ones that I use often, I've actually added it to my favorite. Just click the star. You added up here.
Yeah.
So you just check all these two. This is where you get your dollar sign to identify the liquidity area. You understand that? You understand liquidity area in the market as well?
No. I need to polish up on that.
Okay. I think we dwell more on liquidity tomorrow, since we actually did market structure today and institutional candle. We dwell more on liquidity tomorrow, because you must understand where liquidity is in the market in order to, because we always trade towards liquidity.
Yes.
So I'll talk more on liquidity tomorrow. I'll talk more on liquidity tomorrow as well. But the very first step, just I want to identify your higher
market,
higher low. I want to see you identify it and send to me.
Okay. I'll do that. I'll do that.
So I believe you understand the institutional candles too very well.
No, I can't say no. I can't say I've mastered it. No. Okay. That's what I'm saying. I have an overall idea.
Okay.
Yes.
Okay. Before tomorrow, you still have all those training videos training videos we sent out that time.
Yes.
Go and watch the video on types of institutional, and we have 2 videos on types of institutional candles. One is introduction to institutional candles, right?
Okay.
And the second one is where emphasis is laid on the 4 types of institutional candles that we have. Okay. I want you to watch it before we meet tomorrow.
Wait, where you say where should we, are you talking about the ones that you sent to me initially, or are you talking about recently?
I will resend it tonight.
Okay.
I want to.
Okay.
I will send it tonight.
Okay, that's fine.
And the one I mentioned about pricing policy too, I will send it to you tonight, right? I'll send it to you.
Okay.
But meanwhile, mark up your higher.
Yes.
send it to me. Let me
Yes.
know you understand market structure.
Yes. Yes. I'll do that. I'll do that.
Okay. Okay.
Yeah. Okay. Then you also send me this recording, right?
Yeah. Yeah. Sure. Sure. I'll send it to you.
Yeah. All right. Okay.
All right.
Yeah. Yeah. Thank you very much, Mr. Wale.
Welcome.
Thank you very much.
Yeah.
Yeah.